balance, impulse. Gaps are impulsive moves, right? So what you're seeing happen right here is some big banker institution bought heavily here, driving price action upwards explosively. But when they bought, did they fill all their buy orders, guys? Again, they couldn't have, right? If they'd filled all of their orders here, price wouldn't have gone up. It would have continued to consolidate and move sideways, because when you have equal numbers of buyers and sellers, price moves sideways. But what we have is impulse, indicating an imbalance in order flow of more buyers and sellers, driving price action up, and leaving behind UFOs. What do you recommend for youngsters trying to get into day trading? What's the best app for it? What are you trying to day trade, Mateo? What asset class specifically? So price shoots away, leaving behind unfilled orders. And we can already see that again. Same way we saw up here, it's already hit, come out, hit, come out, hit, come out, hit, come out. Here, it's already hit, pop back up, hit, pop back up, hit, pop back up, and hit, pop back up. Can everyone see how this is bounced? 1, rejected, twice, rejected, 3 times rejected, 4 times rejected. This thing's been hit 4 times. What's recommended? Day trading is typically a little bit tougher for people when they're new to trading, my man. It's probably better to focus on swing trading initially for the majority of people. The reason I say that is day trading requires a lot more discipline. And when you're new to trading, discipline is hard to come by because you don't have the experience to make timely decisions, right? Swing trading gives you a little bit more flexibility in terms of time. We're not necessarily under a time crunch. Now, that being said, have I seen new traders be successful with day trading? I have, but they tend to be very disciplined people. So much content I took notes of. I'm sorry, Jay, I missed whatever you said the first time, brother. Sorry, man. So, institutional buying, institutional selling. We have our zones. They've both really been hit multiple times. Like, just a lot of hits to these zones at this point, right? That was the first hit there. That was the first hit there. Let's drill down to the 4s, and this is where we would look for an actionable trade here on Apple. And really, the only zone I have that's really viable right now on Apple is this little guy right here. I have this impulse balance, impulse continuation pattern. Some big banker institution bought, driving price action up here on Apple. If it wasn't for the fact that it's a standalone 4 and it's so close to SPY, this wouldn't be a bad level in terms of strength of movement. It broke past the oppositional again, very little time. Like, it's checking a lot of boxes that we like. The problem that I have with it is that it's very close to supply. So my risk to reward ratio on this trade is not very good. And this is a great example of where we have to be selective with the trades we take, guys. Trading is not just about finding high probability trades. Of course, you want to find high probability trades, but you also want to make sure that you're taking trades that have enough profit versus your risk. Because no matter how good a trader you are, you're never going to be right 100% of the time, right? That's not possible. Trading is simply probability analysis. I hear nothing but facts from this guy. Thank you, Aaron. So do you recommend swing trading through Webull? I don't recommend using any indirect access broker, Mateo. If you want to trade in equities, which I think is what Webull does, I believe Webull only does equities and crypto, if I'm not mistaken, then I would recommend Thinkorswim, which is a direct access broker, and that's probably the most used amongst our members for stock and options. But yeah, I would recommend leaning towards swing trading if you're new to trading. I find that to be an easier way for people when they're first learning trade. Not that trading is easy, guys, just to be clear. By no means is trading easy. It takes time and effort to learn. But it is a very learnable skill. Like, it's the good news, like what's the expression? The silver lining, right, of that cloud is that even though it's difficult and takes time to learn, it's not beyond anyone's abilities to learn trade because it is very, very process oriented. Like, trading is super, super systematic. When A happens to do B, when B happens to do C, when C happens to do D. So it's very, very process-oriented. It's very systematic. That's why I always tell people, anyone can learn to trade. It's just a matter of learning all the steps and then being disciplined in following all those steps every single time. And that's really probably the hardest part of trading, guys. It's actually like, even after you learn how to trade properly, it's maintaining the discipline. What's up, Seamdoff? I tried getting approved for options on TOS, but I got rejected, so I'm still stuck using Robinhood. I got you, Jay. I unfortunately for me, my man, I have a different setting because, like, you know how they ask at the beginning, have you ever traded professionally? I have to answer that way. So I end up getting a whole, like, people will tell me about, like, the questions and what should I answer to this, and I'm like, they didn't ask me any of that. Like, as soon as I said I traded professionally and I worked at this investment, they're just like, yeah, okay, you're over here in this category. So I didn't get to, I've never seen all those questions that people have about like, oh, what level do you trade and all that. Like, I never had to deal with any of that, man. NVIDIA, we can check it out, man. Yeah, if you're patient, Mateo, the swing trading is great, guys. It's a great way to learn. And if you start at higher time frames, you aren't having that time pressure on you. So it gives you the time to really do analysis properly and really make sure you're doing it thoroughly and correctly. And then you can take your positions, you know. And as you get more efficient at it, if you wish to start drilling down to lower time frames and start looking at like shorter term trades or even day trades or even scalping trades, cool, because now you've built that experience first, right? Absolutely, Mateo. Foundation first. Oh, 100%, Aaron. People love revenge trading. Absolutely. Joel, so it's not quite that cut and dry. But typically, I'm going to give you a generic. Like, realistically, I'm going to look at the actual chart analysis and structure. But typically, if I'm doing a long call on a position in options, if I'm doing like a swing trade, I'm usually looking at an expiration of at least 90 to 120 days because I'm primarily a swing trader. So I just don't want theta eating into my contracts. Now, if you are more of a day trader, if you want to do shorter term expirations because of, you know, the cost, they're less expensive contracts, I would recommend checking out one of the other phantoms, Mr. Blue. He does a lot of day trading. I very rarely day trade. I primarily swing trade. So the one you would want to check out is Mr. Blue. You can see him on our YouTube channel tomorrow. He'll be live on our YouTube channel. So if you go to youtube.com/tradephantoms, you can see him live. If you just click on this live tab here, he'll be live tomorrow morning from 8:45 a.m. to 9:45 a.m. Cool. Hold on a second. Approve. Sorry, some messages. Yeah, we'll go over NVIDIA. When it comes to swing trading, how important is row? To me, not very much, Jay, but that would be a good question for Blue. He would be able to answer that more effectively for you than I would. So to get in swing trading, I need to find the app to follow through with this process. Yeah, Thinkorswim is fine, Mateo. If you want to swing trade like stock and options, that's a great asset, great broker for that. Because you're asking me questions. I missed whatever you said first, Evan. I didn't see the first part of your question. No problem, Joel. Yeah, all right, let's check out NVIDIA. For you guys, for those of you who are new to us, if you've never seen us before and you want to learn more about trading, don't forget we have a free workshop tomorrow night, guys. You can register for free on our website, tradephantoms.com. So if you want to learn more about trading at a professional level, just go here, click the register here button, and in that workshop we will do a deeper dive in all these topics. So we'll teach you more about how professionals trade and analyze in the market. All the phantoms come from the pro side of the industry, guys. So we'll teach you more about how we were trained, how we identify institutional order flow, where the banks buy, where the banks sell, so we can buy and sell together with the financial institutions, right? I do not want to fight the banks. I want to trade with the banks. How to trade in all market conditions, whether the market is bullish, bearish, or consolidating. How to use leverage properly so you can reduce the amount of capital you're trading with, reduce your risk, generate higher rates of return. Very important to learn to use leverage if you're trading for income. The difference between all the different asset classes, stocks, options, futures, forex, crypto, what they're best suited for, and trading for income versus wealth management. Yeah, there are videos on the Greeks. I put together videos on delta, gamma, and theta. If you go to our YouTube channel, man, videos, I guess. I mean, probably you can search, I guess. I don't know how that works. You know, you would think I'd be more proficient with YouTube, but it's not something I actually use as a resource a lot. We just do it. Oh, so there you go. So if you go under the shorts, there's delta right there. That'll explain to you what delta is. This is gamma right here, this video right here, and then this is theta. This one's theta. So part one, part two, part three. So those are to me the three most important of the Greeks in the way I trade. Cool. It's probably deeper than you want to go on TikTok, but I had a short setup on FTX that played out, but the option dated further out actually lost money. I got you, Joseph. Yeah, it's a little too advanced to start getting into the Greeks here. Well, that's why I try and keep it simple here, guys, because otherwise, too much information too soon for people just confuses the living daylights out of them, in my experience. But we can definitely address it inside a class or something, Joseph. What's up, Chris? How you doing, man? You like my pumpkin? I was very pleased with it. I'm planning on doing a Christmas one, too. I'm having fun, man. Alright, let's go to NVIDIA. Let's go check it out. Thank you, man. You gotta have fun, right, brother? You gotta have fun with what you're doing. All right, so let's look at NVIDIA. Did anything shocking happen with NVIDIA here? This was a supply zone. We came out, we came back in, we hit the, I'm sorry, let me go to the right time frame because we're looking at fours and it doesn't make sense. Dailies, right? Impulse, balance, impulse, pivot reversal, beautiful pivot reversal with a breakaway. Price came back in, hit those unfilled orders for the first time right here. That was the first hit, right? Hit those unfilled orders and immediately rejected back out. And if you took that trade, I don't know how much you would have made on it. That I can't tell you, but I can tell you in a second. Because I know some of you took the trade. Even though I was more cautious with it, I know some of you guys did take that trade. I mean, it went over a 2-to-1, so you should have been able to lock at least a 2-to-1 in as long as you managed that trade properly. Then it came in a second time, hit the unfilled sellers, rejected a second time. Now we came in a third time, and finally we broke through structure. So is that really shocking for a standalone daily to have held for once, twice, and then the third time break? No, that's exactly what we would expect, especially with market sentiment being very bullish, right? Next level up here. Do I have a next level up? Kind of. This isn't great in terms of structure, but there is this beautiful gap out. So I would expect some sort of reaction out of this. I would be very surprised if we don't get some sort of reaction rejecting price action out. My issue with it is, of course, we have to see whether it's a worthwhile trade. Well, hold on. Let me delete this because this one's done. I was just showing you before. In terms of risk-reward ratio, this is an area of institutional demand right here. Can everyone see that? That is a drop-base rally. That's an imbalance in order flow. Sunbank bought here, driving price action up. So that is institutional buying right here. So if I am going to take this trade short, I have to see if the trade is justified in terms of risk-reward ratio. What's another thing I need to take into consideration right now when I'm taking shorts in equities, guys? Oh, that's right on the cusp, man. That's a 3-to-1 as it stands. You see the vision for Christmas? Yeah, that's no problem, Jay. Oh, I didn't realize which Jay you were, brother. Yeah, just give me a call. I left you a message with my phone. Just give me a call tomorrow whenever you have a chance. And we'll do onboarding for you, brother. Yeah, sentiment is very bullish right now, right, guys? With the interest rate cuts and everything going on, the sentiment is very bullish right now. So the way I'm treating all, not just NVIDIA, this is across the board, all short positions, I'm treating, we can check it out, Joseph. I'm treating all short positions as confirmation trades. Now, why does that suck in terms of this trade? Well, because I barely have enough breathing room as it is. I'm at a 3-to-1 right on the edge, which means if I wait for a confirmation trade, this is going to be less than a 3-to-1, which means my risk-reward ratio just doesn't justify the trade. Does that make sense, everyone? Now, if you went a little more conservative, if you said, well, wait a second, Black, I'm not going to take it right at the edge here. I'm not going to take it at the 125.58. I'm going to take it where we have the multiple time frame correlation here at the 126.57. Does that give you a little more breathing room? It does, right? Now we're sitting in an area where we can have a 5-to-1, but, and this is a big but I can't take a confirmation trade if I'm waiting for it to get in there. Does that make sense? So that's the complication of it. So it's like you're taking a little bit more gamble if you're going to take that one. If you wait for a confirmation out of that monthly zone, you can wait for the confirmation, but that's not confirming out of the daily zone. So it's a double-edged sword. It's one of those ones where it's like, I personally would not be taking it, but of course, you guys are welcome to do whatever you want to do. Now, on the buy side, on the other hand, this isn't bad, right? Look at this little impulse balance, impulse pivot reversal. It's a standalone daily, but that's good strength and movement out. Broke past the oppositional again, and so far, we have not come back and touched this level. And that's definitely better than 3-to-1. So of the two, which one I'm more interested in? I'm more interested in this long position at 117.06 if price comes back down here. Is everybody with me on that? Does that make sense why I'm leaning more this way versus that way in terms of position on it? Cool. So that's what I would say for NVIDIA, man. What's up, Cha-Cha? Glad to have you here, brother. Alright, so hopefully that helps you out, man. Let's go check out FDX. FDX. Don't forget, guys, workshops tomorrow night. So if you want to learn more about trading, tomorrow's the night. We'll teach you a lot more about it. All right, let's go look at FedEx. I haven't looked at FedEx in a while. Let's start at the monthlies. We always want to start at higher time frames first, guys, because higher time frames do tend to control lower time frames. And you can see how that matters, right? Look at that, came back in and rejected back out. But let's clear everything. I mean, you can even see both of these, right? Demand came back in, hit those unfilled buyers, popped right back up. Where did it pop up to? Supply. Hit those unfilled orders, slammed right back down. Let's start from scratch. We'll do it together. So first things first, do I have any clear institutional order flow here on the monthlies for FedEx? Well, I have this most recent impulse balance. Impulse, area of institutional buying. Some big bank institutions bought heavily here, driving price action upwards explosively on FedEx. And you can see this is a retest of this reversal, right? But when they bought, did they fill all their buy orders, guys? Were all of their orders filled when they bought here? It should go automatically to your email legacy as soon as you sign up. You should receive a confirmation, and then you should receive a reminder 24 hours before, an hour before, and 5 minutes before. Did you not receive any sort of confirmation when you registered? If you have no confirmations, check your spam folder, because sometimes it might get spammed out. But if you don't see it anywhere, just shoot me an email or shoot me a message here on TikTok, and I'll make sure you're registered for it, all right? But it should be as soon as you register, it should give it to you, like within 30 seconds, so to speak. We can check out Soxo, we can check out Affirm, guys, whatever you guys want. Anyway, so obviously they weren't able to fill all their buy orders, right? Otherwise, price wouldn't have shot up. Because again, what does it mean when price shoots up? Impulse indicates imbalance in order flow, right? On the sell side, we have this pivot reversal here. It's a very broad supply candle, but it is still valid. Some bank sold heavily here, driving price action downwards explosively on FedEx. So we have institutional buying, institutional selling. We can see that in both these cases. We've already come back in and hit the zone, right? Here we impulsed out, came back in at the unfilled sell orders. More sellers than buyers. What happens to price? Jesus. There we go. More sellers than buyers. What happens to price? Shoots right back down. Where did it come back down to? To demand. And so far, even though this demand zone was a retest of this one, we're already starting to see a reaction back out of it, right? Will it react the same way? Well, that remains to be seen. Depends how many unfilled orders are left. Let's drill down to the weeklies. And what I'm looking for on the weeklies is two things. I'm looking for trend, and I'm looking for correlating structure. So first things first, looking here at the weeklies for FedEx, is this an uptrend, a downtrend, or a sideways moving trend? I think I had dollar CAD before all this, guys, but we can check out some of the other ones too. I believe, was it UBT that had asked for it? It's a downtrend, and we've established a downtrend, right? We have a lower low, a lower high, and all this is just a lower low and a lower high. So lower low, lower high, lower low, lower high. Cool, cool, cool. If you have a hard time seeing that, sometimes dropping to a line view makes it a little bit easier for people to visualize. Lower low, lower high, lower low, lower high. Is everybody with me on that? Does that make sense? It won't show you gaps on a line view, but you can see still the structure of impulse correction, impulse correction. Cool, cool, cool. So what does that mean for us as retail traders? It just means we'd like to go short. We would rather trade with trend than against trend. Problem is, where are we in terms of price right now? Well, we're just exiting this demand zone. We came back in, hit these unfilled buy orders, and so far we're starting to see a reaction off of that. So not exactly the best level to be looking to go short, right? Either we're going to need to wait for price to retrace back up to an area of institutional selling, or we're going to need to see if there's an opportunity for a counter trend trade. Do we have order flow here? I have this beautiful pivot reversal right there. It has already been deeply wicked through, which is not great for us, right? Because that beats up our purity. But it is still a valid level there, and realistically, that's not good. That's a little bit of a basing right there with an impulse. That's not good. That's crushing us. Because then you look at it, we hit it once, popped out, hit it twice, popped out. So that's a little bit beat up at that point. On the buy side, impulse, balance, impulse, pivot reversal, beautiful level of institutional buying right here. Some bank bought heavily, driving price action up. And that is weekly, monthly correlation. But if you look to the left, this is really a retest of this. Do you see this impulse, balance, impulse right there? Can everyone see that? That's the original level of institutional buying. Some bank bought heavily here, driving price action up. Price came back in, popped up once, came back in a second time, popped up a second time. So we've actually hit both of these levels already more than once. Let's get down to the dailies and see if the dailies give us anything actionable here on FedEx. All right, so here we are on the dailies for FedEx. First things first. Do we have any order flow? I mean, yeah, I'm going to take away the circle, guys, because now it's just in the way. We have this. It's okay. If you really want to get nitty-gritty with it, it's technically a little rally-based drop with a breakaway. But, I mean, I would just include both those base candles. It doesn't really matter. We've already hit it, so it's kind of irrelevant. We already hit it right there and reacted. So if you were going to take that trade, that was the time to take that trade. Now it's way too late. Look at that dramatic reaction. That was with earnings. Oh, great example, though. Who was asking me earlier about how I treat earnings? Somebody had asked me about this earlier, how I treat earnings and how I incorporate them in trades. This is a great example of where I would use earnings as a confirmation, right? So what do I mean by that? This was an area of institutional selling. Many, many weeks went by, nothing happened, and then price came back in. Price came back in right as earnings was coming out. Now, this is the part that's going to sound funny to people that don't trade. It doesn't matter to me what the earnings said. Perchance the earnings was negative. But that's not actually what concerns me. I don't really care if the earnings was negative or positive. I care that we were in an area of institutional order flow when earnings was coming out. Does that make more sense? Because if I'm in an area where banks historically sold or bought heavily right as earnings is coming out, it's pretty rare that the banks aren't on the right side of directional movement on those trades. And it doesn't really matter what the fundamentals say. A great example of that is the most recent earnings on NVIDIA. Right? What was the earnings on NVIDIA, guys? Was it a good earnings report or a bad earnings report on NVIDIA? It was a good earnings report, right? But what happened to the price? It dropped. Right? And people were confused. But if you look at chart structure, where were we in terms of price action? We were in a major level of institutional selling. So was it really surprising that price rejected down out of an area of institutional selling? Well, no, that makes sense, right? That's exactly what's supposed to happen, because if there are more sellers than buyers, price goes down. And now this is the question that's interesting to people and why they should understand to never make trading decisions purely off fundamentals. If you don't know what fundamentals are, guys, it's like looking at news, economic reports, industry reports, earnings reports, things of that nature, and trying to help determine the health of an economy, sector, industry, company, whatever, based off of this information that you're accumulating, right? The reason it doesn't work consistently is, think about it from the perspective of a bank. If you're a big financial institution, right, and you are in a position, what's your biggest challenge as a financial institution when you're placing trades? Absolutely right. Yeah, it happens all the time, man. Your biggest challenge is liquidity. Yeah, you're placing such large orders that the biggest challenge you really have in the market is filling your orders. You're placing massive, massive orders, so it normally takes months, years to fill your orders. So imagine if you're a big banker institution and you bought NVIDIA way, way lower, a much lower price. And now you're at this beautiful level where you've already started taking profit and earnings is coming out and earnings is fantastic. What do you know like 90% of retail traders are going to do when they hear that the earnings report is fantastic for NVIDIA? Especially NVIDIA. Out of all the stocks, especially NVIDIA. What are the retail traders going to do at that point? Oh, they're going to get so excited, right? They're going to be like, oh my God, this could go to the moon. It's NVIDIA, dude. NVIDIA's like the darling of the stock market, right? And so they're going to get all excited about it, and they're going to go and try and buy, and they're going to say stuff like, this could go to the moon, and diamond hands, and all that stuff, right? What's the bank thinking? The bank's thinking like, what a great time for me to sell. right? Because there's going to be so much liquidity from all these retail traders chasing the price action. So you're going to have much more liquidity, and they're going to be able to unload and lock in profit on much more of their position in one fell swoop than they typically would, because all these retail traders are going to chase price action. But eventually, no matter what, banks are placing larger orders, so eventually they override whatever buy orders the retail traders have, and eventually price goes down. And then retail traders are super confused. They're like, I don't understand. Why in the world would price go down if the earnings report was good? It's like, because it has nothing to do with it. It has to do with money. If a bank places a very large sell order to close out position and lock in profit, if there are more sellers than buyers, price goes down. Always and forever. Zero exceptions to that rule, right? That is what price action is at the end of the day. All banks do limit orders almost exclusively, Ken. Banks have specific entries and targets and exits. All the time, my man. That's how we determine if a trade was worth taking or not. Absolutely. Bracket orders, baby. Bracket. Anywho, what do I have here on FedEx? We've already hit this level twice. Impulsed out, came back in at the infill orders, popped up, came back in at the infill orders, popped up. So that's hit twice already on that demand zone. A little bit beat up there, man. On the supply zone, we've already hit it once there. This one's already been hit once and then deeply gone through. Nothing that really excites me as a trade brother. I don't have anything that I would be interested in trading on it right now. Yeah, I didn't look at it, man. I don't really trade the Russell very often. So I really only look at it when you guys ask me to. But yeah, so that's just a great example, right, guys, of like, there's earnings, right? And just where were we? We were in this major level of institutional selling. We had just come back in to this major level of institutional selling. So it wasn't like shocking that price dropped down. It did exactly what it's supposed to do. More sellers than buyers, price goes down, right? Visa? We can check out Visa. We looked at that earlier today. No problem, Joseph. Supply's already been hit. That was the first hit. We like first hits, guys, right? Because that's what gives us the best opportunity to buy or sell together with the banks, take advantage of their unfilled orders. Dude, there's just nothing here for me, man. This isn't good structure, and even what we have as structure has already been hit multiple times. Like, you can see, like, there's this little demand zone right here. Do you see this little guy right here? So this little impulse, balance, impulse, continuation. It's a demand zone. It's valid, but if you look at it, we gapped out, came back in, hit it once, popped up. So that was the first hit right there. Like, almost immediately, first hit, right? I don't need it to be quite that massive. Came out, came back in a second time, popped up. Like, you can see the reaction to it, right? Impulsed out, came back in, hit the unfilled buyers, popped up. And we've come in a third time and rejected back out a little bit. It's just too beat up, man. This one's too beat up. Next best level is all the way down here. So if you want to wait for price to come back down there, there's a potential opportunity to trade. But where we are right now, let me turn on magnets again. But where we are right now, there's just not a lot for us right here, man. It's just too beat up. So if you can get all the way back down here, here we have daily, weekly, monthly correlations, zones on top of zones on top of zones, and we love zones on top of zones, right? They form stronger levels of imbalance, especially if we can get to where all three zones overlap each other, 260.35, but at least to the top of this little guy at the 261.14. That's a potential opportunity to go long. On the supply side, if you're going to trade this level all the way up here, only as a confirmation trade, because it's already been hit. 290.96 potential confirmation. That's what I got for you on Visa, my man. Cool. How close do you place your take profit compared to the supply demand zone? So for the most part, I place it right at the level, my man. There are exceptions to that. Like, for example, if I'm trading Forex, because of the nature of how Forex is traded and how heavily it's traded by banks and institutions, if you're not experienced with Forex trading, guys, banks do a lot of liquidity traps in the Forex market. Because you got to think it's where they invest the majority of their money, right? So they are very heavily invested in the Forex market. They are very heavily trading the Forex market, which means there are a lot of liquidity traps. So in Forex, I will include a buffer, typically between 10 and 15 pips, in addition to my zone structure. So I'll give myself that extra room, you know. But in most assets, I'm going to be trading as soon as it hits the level, although I will use different types of entries depending on the setup. Like if I have a zone that's already been hit, then I'm not placing a straight limit order. I'm waiting for either a zone entry or a confirmation trade. So it's all relative to the setup. No problem, man. We can check out Affirm, we can check out ARM, Shopify, sure. Yeah, I'm just doing your Soxel right now, Miguel. Or Miguel. No, a confirmation trade can, so it's a technical term. What it means is you're waiting for a reversal candle close outside of the zone in your direction. Oh, Jade. Well, they do it in all markets, but they really do it a lot in Forex. It's one of the reasons Forex traders are very frustrated when they first start. Because if you ask me, in my opinion, like what's the asset class that has the quickest learning curve, which is a really tough thing to say, right? Because nothing's quick in terms of trading. But the fastest learning curve, in my opinion, is probably Forex. But it's not like futures trading where you can be super precise and snipery. You have to give a little bit more wiggle room in the Forex market because it is so heavily traded. Like people forget, Forex is the largest market in the world. That is where banks invest the majority of their money, guys. It's the biggest market in terms of retail traders. It's the biggest market in terms of banks and financial institutions. It trades over $7 trillion a day. So it's a massive, massive, massive market, right? By far the biggest market in the world. So it's kind of like, the way I put it to people is like, it's kind of like soccer. You know, like soccer is or football, as the rest of the world calls it, is the largest sport in the world. In the U.S., it's not the largest sport, but the entire rest of the world watches soccer. Right? So Forex is the same way. Forex is by far the largest market in the world. It's what the entire rest of the world trades. And then like the stock market is much, much smaller in comparison. But here in the US, if you say you're a trader, people assume you trade stocks. So it's just kind of funny. I don't know time frame anymore on my clock. What do you mean, Will and Sound? What's up, Parisa? So anyway, we have all our analysis done here on Soxel because we literally looked at it earlier today. You can see right here, we have this pivot reversal, and it is a retest of this level right here, impulse, balance, impulse. That is daily, weekly correlation, good strength of movement, came back in, hit the unfilled orders. That was the first hit. And that's where we like to get in, right, guys? First hits are our best opportunity to take advantage of the bank's unfilled orders and sell together with the financial institutions. So that was a nice trade. Create a little bit of zone creep on that retest, and it has a breakaway. If price does come back all the way up here to the 38.68, that's an opportunity for us to potentially go short. But again, what am I doing with short positions right now, guys? What's my attitude towards short positions right now? We have not done a MU. Cheapen my homework. What do you mean cheapen your homework, Willinson? I don't understand what that means by cheapen. Alexa, skip. You want to see if you can cheat in your homework? I don't know how you do that, brother. That's pretty funny, though. Oh, you're saying like you want me to do analysis and then you'll copy it? What good does that do, man? I already know how to do it. You want to learn to do this for yourself, brother. Don't worry, man. Dude, you barely started with Son. We're going to get so detailed next Monday that you're going to be like, never mind, I have more detail than I can possibly handle. We can check it out, though, man. I don't mind checking out Netflix, but that's funny. So that's where I stand right now, man, with Soxel. If you can get back up to that 38.68, potential opportunity to go short. Even better if you can get to the multiple time frame correlation at 38.79. But considering how close those two price points are, I would just take it at the 38.68. But again, I'm only taking confirmations right now. I'm not taking any limit orders right now for shorts, right? Because market sentiment is very bullish, and I don't want to trade against market sentiment. Cool. I don't want to jump in front of the train, man. We can't just assume the train is going to grind to a halt. I want to wait and see the train reverse before I go and jump on those tracks, right? All right, so that's Soxel. What's next? Affirm, somebody asked for, I believe. Don't forget, guys, workshop tomorrow night. For those of you who want to learn more about trading, if you're not a Phantom member and you want to learn more about trading at a professional level, I'm teaching a free workshop tomorrow night, 7 p.m. Eastern. You can register right on our website, tradephantoms.com, and we'll do a deeper dive in all these topics, guys. We'll teach you a lot more about how professionals trade, how the markets really work, how we identify institutional order flow, where the banks buy, where the banks sell, so we can buy and sell with them, how to trade in all directions, whether the market is bullish, bearish, or consolidating, how to use leverage properly, so you can reduce the amount of capital you're trading with, reduce your risk, generate higher rates of return, the difference between all the different asset classes, stocks, options, futures, forex, crypto, what they're best suited for, and trading for income versus wealth management. So we'll teach you a lot more about trading at a professional level. And if you are interested in becoming a Trade Phantoms Pro member, if you want to join our army of traders, we have pretty good ratings. But if you want us to actually teach you and trade live with you and show you how to trade and teach you step by step, you will have a special opportunity to enroll at a discounted rate because we have that promotion going for new members. Impulse balance, impulse air of institutional selling right here. Nice little supply zone here on a firm. We've already hit it. And realistically, that's pretty close, right? Hit it, popped out, hit it, popped out. So this thing's already a little bit beat up. On the buy side of things, I mean, technically this is a demand, right? It's just a little broader than we would like to be. That is an impulse balance, impulse pivot reversal. Some bank bought heavily here, driving price action up. Thank you, Parisa. Appreciate it. Thank you, Garrett. We do what we can, man. I don't love this. This is not great for us, this big, deep wick through it. We'll see what this looks like on a lower time frame, but usually means there's a retest on a lower time frame. Either way, we got monthlies. The wicks don't break zones, guys, so the zone's still valid because wicks don't break zones. Why don't wicks break zones? Because banks will push price through levels purposely just to knock out retail traders. And that is a very important thing to understand about trading, right, guys? When you're trading in the financial markets, it's not a level playing field. You're going up against professional traders who are actively trading against you, right? Banks are actively targeting you because you are the liquidity.